Over the last few weeks, we have witnessed big players like JP Morgan and Goldman Sachs warning the public about a recession. JP Morgan said 60% chance of one, Goldman Sachs said 45% chance. Now, these were just two big names. We also witnessed other names coming out of the woodwork saying that a recession is going to happen this year, and even retail was betting big on a recession happening this year as well. But one thing that I have stated on this channel is that the trade war and the tariff discussions are getting blown out of proportion. I am still extremely bullish this year on risk on assets, and that does include crypto. But in this video, I want to go over a lot of information really kind of supporting that argument. So sit back, relax. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So when we think about crypto right now, right, we're at about almost a $2.7 trillion market cap. And the market has been ranging for quite some time. I mean, Bitcoin is still at about 85K. XRP is about $2.08. Most of the 24-hour, span in terms of gains, and even in the last 7 days, a lot of these moves that we are seeing in the market are just bounces off of the lows, as you guys are probably all aware. But when we look at Bitcoin, this is the last month, okay? And if we go back to the 1 year, and we're really kind of looking at this, there has not been a positive gain on Bitcoin since going back to the 19th of January. So we have just been chopping for well over 3 months now on Bitcoin, and even on XRP, it's a very similar, state. And this is for the entire market, altcoins, for Bitcoin, you name it. So, while we are chopping and while we're ranging, what we're really kind of witnessing here is consolidation. Now, consolidation typically, drags on for quite some time, but the longer the consolidation, the higher the price move to the upside. Bitcoin was very, very clear on this. If we actually look at Bitcoin and we go back to just 2024 and we look at this range from roughly $70,000 all the way down to about $55,000, it was roughly 6 months of just sideways price movement, and then we start to bounce a little bit. Now, it took a total of 8 months for this to actually happen, but we ran from $55,000 up to $109K at the peak, and some of these price levels were a little bit lower depending on like the actual candles, but I just want to put that into perspective on, how much we dragged on, and then that big move to the upside and how big that move to the upside actually was. Now we're still doing the same exact price move where we're just chopping sideways, and we've been chopping sideways for about 3 months. The reason why I bring that up is because the longer that we range here and the longer that we chop here, the bigger the move to the upside. And when we break over 110K, that price move from 110 to $150,000 on Bitcoin will happen fast. Now, during that same exact time, I do suspect that Bitcoin dominance will start to sell off in a huge way. We're now nearing a price level on Bitcoin dominance, or a percentage level, I should say, that we really haven't witnessed since going all the way back to 2021. Now, in terms of altcoins, yeah, we're not in an altcoin market right now. We're still very well in a Bitcoin market. But this is why I'm looking at the dominance across the board, and I'm watching and I'm waiting to see alts start to gain a lot of momentum. Until then, the altcoin market will probably still be a little bit boring as we're tied back to Bitcoin in a big way. And while Bitcoin is just doing this over the last month, well, you're not going to witness some, big moves across the board. But I do think that we're getting very close. Now, let's actually talk about that, and let's talk about why. Number one, let's hear the big update on a recession. So we have new Director of National Economic Council, Kevin Hassett, says 100% not to a recession in 2025. Now, are we going to listen to this and say, all right, well, that's it, the recession's out of the picture? No. We're going to utilize this video and then information that we now know of to support the argument of us not having a recession this year. But check it out.
Real quick, are you expecting a recession this year? 100% not. 100% not. If you look at the jobs numbers, they're very, very strong. When I talk anecdotally to CEOs, I say things like, well, geez, is the uncertainty over tariffs looking like it's going to be a big drag? And they're saying things like, no, in terms of production, we're getting as much onshore as we can. And in terms of sales of foreign goods, people are buying as many as they can because they're worried about future tariffs. So everything's through the roof.
So yeah, I mean, listen, when we really think about what's going on here with the trade war, the tariff discussions, everyone is worried about the recession because, you know, when it comes to the trade war and the tariff discussions, what we're starting to see is a global slowdown. And ultimately, you know, if you think about it, a lot of the halting of, you know, specific goods and things like that, it's going to cause a big shock in the supply chain and in the trade you know, side of things. So, you know, I just watched as somebody said, oh, it's going to be like, you know, 2020 all over again, where, you know, it's going to be almost impossible, you know, to get certain things. We're seeing a slowdown across the board. This is going to cause a shock, you know, to the economy. This is going to cause a big problem across the board. And that's why we're starting to see a lot of people supporting the idea of a recession, because they think that it's just like, you know, March of 2020 all over again. But I don't think that that's the case. In fact, the reason why I say that is because of the deals that are ongoing and the discussions that are ongoing. For example, we now know that Italy's prime minister said that they're sure that we will make a deal on tariffs. Now, this was on the 17th. Also on the 17th, President Trump says that he's very confident about a new trade deal with the European Union. Now, again, a lot of people are questioning whether or not this is true or not, right? Like, are we just, you know, hearing talks? Are there actually deals ongoing? Like, what's going on here? I actually think that there is deals ongoing. And the reason why I say that is because of Japan. So on the 16th, we heard from President Trump saying that there's big progress being made on a trade deal with Japan after meeting with Japanese officials. 3 days later, we saw Japan looks to ease import rules for American cars. This is a big deal. This is showing us that there is deals ongoing. There's deals being made. Tariffs are technically working here. And then, of course, we look at the big one, which is China. Now, on the 17th, we heard President Trump says the U.S. will make a deal with China. And then, a day later, we got President Trump says that he's had nice conversations with China and it's going very good. Now, we have yet to actually see a big update from this, but I do think that we are getting closer to a deal being made. Now, I want to share this clip because this is going back to March 27th. I know that this is over a month ago, but this is Arthur Hayes. Now, what he was saying here is exactly the environment that we are now in, which is why we're looking at the Fed. This is why I actually just recently said in a video that the Fed is going to pivot. We have April will be a turning point, says co-founder of BitMEX Arthur Hayes, who predicts a new wave of market growth. Hayes believes Trump's tariffs won't impact Fed policy, the money printer will keep running, and a fresh round of global liquidity is on the way. Check it out.
What going to do on tariffs? Is it going to be reciprocal tariffs or a 20% tariff on everyone? He said, we believe that the inflationary aspects of tariffs are transitory, which basically means, let's say that Trump goes full 50% tariffs or some ridiculous number, and that causes domestic inflation in the U.S. as prices rise. Powell says, no, that's not inflation. We can still continue to ease conditions because we believe that is a transitory effect. That is not a long-lasting measure of inflation, and therefore we are within our mandate to continue to ease monetary conditions. So tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't matter because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar. I'm going to do on.
So yeah, I mean, listen, I don't think that anything happening around tariffs and the trade war is really going to impact the markets the way that people have been thinking. Even right now, if we actually think about the M2 supply, right? It's been on a massive uptrend since the end of 2024 into the beginning of this year. You guys are probably all aware of this chart. This was from Raoul Paul with Global Macro Investor. This was the 12-week lagging factor on the M2 with Bitcoin, and we were waiting for Bitcoin to start to jump here. Now, if we actually measured this out, Bitcoin should technically be at about $120,000 right now instead of this $86,000 level that we're, trading near now. Now, the updated view of this chart is actually this. Now, this got posted on the 16th. You could actually see that this overall indicator is playing out perfectly. We have that significant sweep of the bottoming zone on Bitcoin and even on the M2. The M2 started to spike up, with a little bit of it's a little bit of a sell-off here and there, a little bit of chop, but it's ultimately a chop to the upside. And right now, Bitcoin is already doing exactly what the M2 was doing, but 12 weeks later. And what's crazy about this is that if that is the case, by summer, we should be nearing $100,000 on Bitcoin. Now, if that is the case, where does the rest of this market go? What are we actually looking at? Well, number one, we look at Bitcoin. So if Bitcoin was to make its way back to $100,000, which arguably we break over 100K, big psychological level, the impulsive move from 100 to 110K is going to happen extremely fast. Now, during that time, like I said, I do believe that Bitcoin dominance will be on its way down. I've been focused on Bitcoin dominance over the last couple weeks. I've been sharing updates within the Discord as well on Bitcoin dominance, supporting the argument that, we will start to see a big shift across the board. Like, even right now, everyone is extremely peak bearish on Ethereum because Ethereum just sold off into like the lowest level since going all the way back to like 2023. And everyone's wondering, like, is this the death of Ethereum? Is Ethereum officially gone and done? And, everyone's moving from Ethereum over to Solana and all these other chains. I can't believe that Ethereum is dying, etc., whatever. So everyone is peak bearish on Ethereum, which if we're thinking about that, if the crowd is thinking that Ethereum is done, what does that tell you? It tells you that when Ethereum starts that uptrend and it starts to bounce back, headline articles are going to be everywhere. The FOMO back into Ethereum is going to be insane. That will be our phase 2 of the cycle, which is the Ethereum phase, followed by alt season. Nothing has changed here. Everyone thinks that everything has changed because of, regulatory discussions, institutional players, ETFs. Nothing really has changed. The only big difference that I actually see right now is that there's more money in this market. There's more money, there's more people, which is only telling us that this is going to be a much bigger bull run than 2021. So then we're thinking about, all right, well, what does that mean for XRP? What does that mean for HBAR? What does that mean for altcoins? Well, XRP, we can't really measure too much, right? Like if we are talking about 2021, did XRP do a very good, push back in 2020 into 2021? It still did over a 10x push, which was good, but it was delisted from every single major exchange. It was in the middle of a lawsuit. Today's XRP is 10 times more bullish than XRP back in 2020 into 2021. So we're thinking about this, all right? And if XRP is currently trading at a fully diluted value of $209 billion, $122 billion, current market cap, and we go back to the historical snapshots and we go all the way back to, 2021, and we're looking all the way back into like November, right? And we're thinking about Ethereum trading at over $500 and almost $50 billion in market cap. Well, wouldn't it be safe to assume that this cycle, if XRP dethrones Ethereum, which I think that it has a high probability of doing so, wouldn't it make sense for Bitcoin, because Bitcoin's almost at 2 trillion again, wouldn't it make sense for the second largest crypto asset to mirror about 50% of what Bitcoin is worth, which means the second largest crypto asset towards the end of the cycle, towards the top of the cycle, it would have almost $1 trillion tied to it in terms of market cap. Because again, typically we have the second largest crypto asset over time. have about 50% of the value of Bitcoin in terms of market cap. It would make a lot of sense for that. And if that's the case, if XRP does dethrone Ethereum, becomes the second largest, crypto asset, matches that 50%, then we would actually be valuing XRP at nearly $1 trillion in market capitalization, which, would well be over a $10 XRP, which is extremely bullish. Now, that's just XRP. We're not talking about other altcoins. I think that this entire, space is going to see tremendous gains over the coming weeks and months. And I do think that the top 10, if we're actually thinking about the top 10, back in 2021's, cycle, the top 10 was worth 30 some billion dollars. I think that around this time, the top 10 would be valued at roughly 60 billion. To get into the top 10, you would have to have about $60 billion in market capitalization. A lot of people will argue with me saying that that's just ridiculous, but think about how much more fresh liquidity and capital is now in the space. Think about all of the institutional players now a part of this space. The more retail participation than ever before. We have ETFs trading live. Like, the entire market dynamic has changed because of how much more money is tied to it, how much more participation there is. And the institutional focus is just off the charts. So, I don't think that we're going to top at 3 trillion. I don't think that we're going to, top at 4 or 5 or 6 trillion. I think that the top could very well be at about 7 to 10 trillion. We got to see what happens over the coming weeks, but I'm just looking at the entire environment, and it just feels as if everyone is blowing the trade war and the tariff discussions out of proportion. They're getting extremely bearish at a time where I don't think that we should be bearish at all. But with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.